Hi and welcome to the Market Alert for Friday the 16th of December 2022. There's a lot to get through today, so sit tight, buckle up and let's get on with it. So soft landing seers, those who thought the Fed were going to pivot, were slayed amid macro meltdown, stocks dump and dollar jumps during yesterday's session. US stocks were hit amid global stock sell-off after central bank rates hike weak data. And global risk off after data slips, dollar rips and ECB's hawkish whip as well. So the ECB also yesterday saying they were going to continue to raise rates. Speaking of which, yesterday we saw the Bank of England raise rates by 50 basis points. None of this is news to you if you follow the markets, and the ECB also raising rates by half a point as well, 50 basis points there. All the news not too good yesterday either. So yeah, an interesting day, but the tone was already set on Wednesday night with the FOMC raising rates for the short side, and that's I took advantage of it yesterday because I was surprised that we didn't actually get a move to the upside from that news, but we would have done had Powell said, well, this is the last big rate I'm actually going to do, then there would have been some sense of a pivot, but he quashed all of that by saying that he was going to continue raising rates, and that's why we saw the negative yesterday. And of course with the Bank of England and the ECB raising rates, it was a no-brainer really that the market was going to continue to the downside as they added to the fuel with those half a point base rates yesterday. So let's kick off and have a look at the Dow. Here you can see this moving sharply to the downside yesterday, giving up its gains. We traded down to 78% retracement, 50 EMA, where the market found a bit of support there, which you can see. In the 30-minute chart for the Dow, it was selling in the morning, which you saw there. Took advantage of that, and then also of this situation here where the market continued lower as well, trading down to the S3 for the Dow, which is an area where a market is likely to find support 90+% of the time. I'll come to the 1% in a moment when we look at the DAX, and then you'll see that the market currently is at yesterday's close. We've got the low down here, which is not too far away. DP is got the 50 bar moving average, and the R1's also got the 200 MA before we get anywhere near the actual high. Yesterday's move from the pre-market down to the low of yesterday evening is 982 points for the Dow, but the main session you'll see that the market continued to move lower by a further 664 points. In the German DAX, you can see also we had selling yesterday, the market moving lower. Not too much selling though, more of a move to the downside. And again, if we have a look at the fib retracements, I'll show you this in more detail actually in a second in the trade, and how I used the fib retracements yesterday to get out just above the low of this bar in the daily chart. I traded the 30-minute chart yesterday. I actually got short the night before in the DAX, held overnight given the fact that there wasn't any really decent news to move the market to the upside. The two last economic news items from the Fed, CPI and the FOMC, were already in the market. There was no other news, and if it was going to be bad news, i.e. war or black swan event, then the market was going to go lower. So judged that the risk of holding a trade overnight wasn't too much of a concern given what had happened, but we'll look at that in more detail in a moment. This is the overall picture, as you can see here. Again, if we just have a look from yesterday morning all the way down to the low, it was 445 points, which is stretching the DAX considerably on the downside. You'll see again the low is close, we're just above the close, and we're above the 5-bar moving average, similar to what we've seen in the Dow. The DP and the 50 EMA and the R1 and the 200 EMA and the 30-minute chart have a bit of an issue for this market. So let me just show you what happened yesterday and how I took advantage of it and took 1200 out of the market. So here you can see I was already short, and the market had moved down. We had a profit there of 29207. I'm going to fast forward through this because this was hours of holding this trade. So let's just move forward. Here we get into the sideways move at lunchtime, and we're also down to 78% retracement from here, projected back. So I'm looking at this sort of figure here, and then we've got this low here. So it was quiet through the rate hikes of the ECB and the Bank of England, and then the market just decided to sell off, as you'll see here. Trading down to the low that we had, and then we got that 14,123. 14,000 obviously is a big psychological number for the DAX. I also added in a few more trades in smaller time frame after the reports as well, as you can see there at the bottom, and took the profits on those. I thought I'll just trouser those, and then I redrew the fibs, and as we approach the 38, you can see there just redrawing everything just to see where we are. And I'm just going to fast forward through this, and then as we approached the 38% 62, there's two lots of fibs drawn onto this, and given that I've seen this before where the market then will have a bounce when the Dow kicks off initially, so I decided that as we got to this 38 and we were trading to it, went down into a smaller time frame just to have a look, and I could see that we got support coming in the 1 minute chart. Like I say, the chart of choice yesterday was the 30 minute, and what I was trying to do here was to hit the 1000 and then get out of the trade, but that didn't happen, which it never does it? But as you'll see, as the market came back, I then decided, based upon what we got here, we had a big move to the downside, we're likely to get a bounce, which we did. We had a small bounce after I got out, so I'll just forward this, and you'll just see the trade being closed at that 38.62 level. So the net result of this was 1290 with all of the trades. There were 5 trades in total, and it was 100% winners because they were all short ones. I love the short side. You don't have to wait for the market to consolidate as much before it actually moves. It's the staircase up, very frustrating on the long side. Short side, when the market goes, it goes fast, and that's what we saw yesterday. So 1290, and then from Monday to Thursday we're at 15,850 and 4.53 profit factor, and it's only 56.44 on the win-loss ratio, but that doesn't matter because what counts is the profit factor and the net profits. So in the S&P, this also down yesterday, back below the 4,000 psychological level. Bit of a bounce on the overnight, which we're seeing there, trying to get back above the close and head back to the DP. We do have the expiration today of 4 trillion of the options as well for the Dow, the S&P, etc. That will kick off overnight and then into the main session at 2:30 as well. So keep that in mind. UK market down, nothing major though, compared to the DAX and the Dow. And again, overnight you're seeing the market already at the DP for the FTSE, which you haven't seen for any of the other stock markets. They're all way below, sitting at the close, whereas the FTSE is at the DP level there. In the currencies, dollar up yesterday, GBP, JPY down, and down on the overnight as well. Still stuck in a bit of a sideways move. We had a move to the downside yesterday of over 100 points, but it consolidated at lunchtime, waiting for the interest rate news, which we also saw with the DAX and the Dow. And then overnight, the market is testing yesterday's low, which you can see at the moment, sitting on it. See how powerful these levels are. To get through this, you've got the 50 EMA, the 200, they've got the close of yesterday, DP, R1, and any chance of getting back to the high is way up here after you've taken out all these other resistance levels. Meanwhile, in the pound, down yesterday as the dollar moved higher, but overnight things have changed a bit and the pound is consolidating, not near yesterday's low, above the close as well, and again, like all of the other markets, heading back towards that DP R1, and then it's got the high. However, if the market takes out the low, then expect lower prices there too. Meanwhile, in the dollar, you can see yesterday the market up for the US dollar, just above the 5-bar moving average, but overnight showing a bit of weakness there. 30-minute chart of this market. Let's have a quick look. You can see yesterday's interest rate news, and then the market coming back a bit, and overnight showing a bit of weakness there as well. In the metals, silver down sharply yesterday, but finding a bit of support overnight, which I would expect, just coming off the low for yesterday there. So down overnight yesterday, hammered down, stable yesterday, but overnight a bit of a retest of yesterday's low. Gold also still below the $1,800, but trying to get back above that 200 MA in the daily chart. And in the 30-minute chart, again, one of trading sideways with the interest rate news reaction that you can see there. Heading back towards the DP at the moment, needs to clear this in order to move higher. I can see that we've got news out today as well, so let's have a quick look at this before we conclude. So economic news today, we've got UK retail sales. They're out shortly, 4 minutes time, so that'll be out before you see this. And then we've got all the flash news today, which is a pain in the proverbial because you don't get a lot between each economic release there. So that's a quick roundup of yesterday. Great day. Bring them on. We want more of these. We want that same level of volatility as intraday traders and medium-term traders as well. Okay, that's it for this one. Have a great weekend. As ever, thanks for watching. See you in the next one.